So did you know that your life insurance agent and company are probably conning you?
No, my life insurance agent is great. He knows everything. He tells me regularly how much of a return I'm getting on an investment.
See, if you are getting a return on investment in your life insurance,
Huh.
then you are getting a substandard product and you are being conned.
What?
Yes. So today we should talk about this, that what exactly is life insurance, why it shouldn't be mixed with investment, return on investment, and what is the right way to buy life insurance, and what is the right amount of life insurance to buy.
Oh, this is going to be really interesting. Please start.
Okay. So the whole point of life insurance is that if you die, your beneficiaries, the people who are left behind, they should not suffer financially.
Yeah.
Right? That's
That's the whole idea. That's the
That's the
basic
whole
idea.
idea, right? What a life insurance company is doing is collecting together premiums from thousands of people.
Yeah.
And they know that only a few of them are going to die. Okay. So when somebody dies, the money collected from a whole bunch of other people is distributed to the few people who die, and the ones who didn't die lose their money.
Makes it sound like a lottery, more or less.
But they don't redistribute all of the money.
Correct.
Of course, some of the money they're keeping for themselves as their profit and their expenses, right?
True.
Now you should remember that all insurance companies make a profit, right? So they are definitely keeping a bunch of money for themselves.
That's a great point.
Yeah. Now, but you still want insurance, okay?
Of course.
Because if you happen to be one of the unlucky ones that dies, you do want money to go to your beneficiaries.
Correct.
Okay. But there is no reason to mix this up with investment.
No, hold on a second. My policy says that if I die, I get a certain lump sum. If I don't die, then at the end of a certain period, I anyways get a certain amount of money back.
Yeah. See, that is mixing up. See, when you put money in a bank and you get it back with interest, right? That's investment.
Yeah.
Okay. Whereas when you pay somebody money saying that cover me my life so that if I die, give me money. The whole point of life insurance, the way basic life insurance works, is that you have collected money from 1,000 people and you have redistributed that money to the 5 people who died. Correct. The other 995 do not get money back.
Then what are they getting back?
They shouldn't be getting anything back. What the company does is that it collects extra from everybody, uses some of it for insurance, and the rest they are investing on behalf, right? So you are mixing up two different products, an investment product and a life cover product.
But I thought I was getting the best of both worlds. I was getting...
Well, so it's like, Jadeja is the best of both worlds. But is he going to be the greatest batsman of all time? No. That is going to be Sachin.
Yeah.
Is he going to be the greatest bowler of all time? No. Right? If you have two cricket teams, one has 11 Jadejas and one has a mix of Kohli and a wicketkeeper like Pant and a fast bowler like Bumrah and a spinner like Ashwin, which one is going to win?
The one with the experts.
Right? So do not mix things up. A microwave cum grill is a bad microwave and a bad grill. Okay. And that's what insurance product. It's called an endowment, by the way. Endowment means that suppose you got a cover of 1 crore. If you die, you get 1 crore. If you don't die and the period expires, you still get back 1 crore. Right? That's called an endowment. What is the disadvantage of this?
What?
The premium they are collecting is much higher because this much premium they need to cover you for
life
insurance, and then this much premium they need for investing on your behalf and then giving you back the 1 crore in case you didn't die.
But of course, because they are investing on my behalf, they'll be taking service charges or whatever charges on top of it. So they'll be skimming some of it and they are not investing all of it, right?
Correct. And I mean, they basically, if you wanted to invest, these two, right? Separate out. Use this for insurance and this you invest. Go to the best investing companies, right? Don't go to an insurance company for investment. If you separate this out, so this is Sachin and this is Bumrah. right? And this is Jadeja. You don't want Jadeja.
Yeah.
Okay.
Makes sense now that you put it that way.
Hmm.
So Naveen, tell me, who should have insurance and how much insurance should they get, and what kind of insurance should
Correct.
they get?
So first of all, kind of insurance, right? There is something called term life insurance,
Okay.
which you pay a premium for a period like 10 years or 20 years. At any time, if you die, you get the full
Lump
sum
sum
insured,
insurance.
right? If the term expires without you dying, you get back nothing. That's this part. The advantage of this is that the premium is ridiculously low compared to the premiums of the endowment insurances. Okay. So if you are doing budgeting for your life, right, you will realize that doing a term life insurance is much, much, much easier on your budget because the premium is so small. Sometimes that'll be 5x or even 10x it can be. Okay. So that's the first thing. Buy term. Do not buy endowment insurance. Do not buy money back insurance.
Endowment insurance is the Jadeja insurance that you were explaining.
Yeah.
Okay.
The other thing to keep in mind is how much insurance do you need? Let's take that question. Okay. The important thing about insurance is that if you die, the people left behind, they should not suffer financially.
That's the whole idea.
So, what you want to do is you want to figure out how much money they need. Okay. The whole point, presumably, is that you are the person earning money, and when you die, your income goes away, and they need to replace that income. Okay.
Right. That's
That's what you want to replace. But there are a couple of interesting twists there. Okay. First of all, you have to figure out not how much money they need. You have to figure out how much is the money they're falling short of. Okay. Because right now, let's say, imagine a couple where the husband is working and the wife has chosen to be at home. Okay. If the husband dies, it is possible that the wife decides that, now I can't afford to be at home. The wife takes up a job. Okay. So maybe the husband was making 1 lakh per month. Wife can get a job of, say, 40,000. Then 60,000 is the shortfall, right? Okay. So you don't need insurance which will give her an income of 1 lakh. You just need insurance which will give her an income of 60,000. Correct. The shortfall. Correct. So you have to compute what is the monthly shortfall, which is the monthly expenses minus the income that can be generated. Correct. Also, you might consider reducing the monthly expenses, that she might decide that I don't have to live that luxuriously. I can reduce some of my expenses, right? So that's one thing. Next, you also have to, now based on that, once you have a number for monthly shortfall, say 60,000, you want a sum which is going to give you roughly 60,000 of income per month, right? You will find online calculators which can calculate what is a lump sum that gives you a certain amount of this per month. Okay.
Should we also be adjusting it for inflation, just off the top of my head?
Those calculators do that.
All of
right?
that. Acha.
I mean, in the calculator, you can put in, this is the interest rate that one gets, this is the inflation that is expected. You put all of that in, and it will come back saying that for 60,000 per month, you need about
whatever number.
Some number. Yeah.
We'll try and find those calculators for you and put them in the description, so you will have an easy link to get to them.
But if you are lazy, I'll just give a simple rule of thumb, which is that multiply the monthly income by 200, and that gives you approximately the lump sum needed. Okay. But this is,
so in the example of 60,000 multiplied by 200 gives you
1.2 crore.
Yeah.
Right?
That's the term insurance you need.
No, that's not the term insurance you need. That's what is needed to give you your monthly income. But in addition, there can be other big expenses. So if there is debt, right, you have taken a loan that needs to be paid back. So add that into the lump sum. If you have some big expense coming up that you know that I want to spend so much on my child's education, add that into the lump sum. Okay. But then also subtract savings from the lump sum. If you already have 60 lakh saved and in the market, right, subtract 60 lakh from the 1.2 crore, right? If you have assets, you have gold or something like that, subtract that also. Okay.
I have
So
nothing. So my number is going to be like infinitely large. I'm now sweating. You can't see it, but I'm sweating.
yeah, but important is this calculations.
Hmm.
That is what tells you how much money you want, right? Because money is only needed for living, right?
Okay.
The money is not going to be replacement for if Shrikant dies, I need 1.2 crore to feel happy, right?
Yeah.
So you have to calculate how much money is needed, not how much insurance can I afford.
Correct.
So that is what you should do.
So we have answered how much insurance, what kind of insurance. That leaves the third question: who should be insured?
Yeah. So I explained how to calculate how much insurance,
Hmm.
correct? Now, if you do that calculation, in some cases it comes out to be zero, and you don't need insurance in that case. Okay.
In what cases?
So my mom
Huh?
called me up one day
Huh?
saying that she's bought insurance, life insurance, so that when she dies, I will get money. Okay.
Okay.
I am 50. My mom is 75.
How sweet
Okay.
of her.
Right. The point is that if she dies, I don't need her income. I already have my own income, which is enough for me.
Yeah.
Okay, when she dies, I want emotional support. I don't need money. So her buying insurance is completely because some agent conned her.
This
It's
is
a
such
waste
a
of money.
bizarre conversation, and yet it makes so much sense. I'm trying to wrap my head around it, and if you're struggling, I'm with you. But yeah, this is fantastic.
So in fact, let's do a quiz of
Huh.
who needs insurance, right?
Okay.
Life insurance quiz. So this question is, somebody insured the life of their 10-year-old son,
Huh.
with the beneficiaries being the 40-year-old parents, right?
Okay.
Do they need this insurance?
Are the 40-year-old parents not working? Do they not have a steady stream of income? Because I don't know why insuring your 10-year-old son kind of makes sense.
No, it doesn't. Right?
It's
If the son dies, you will be sad, but you don't need that son's income,
okay.
right?
That's
On the other hand, there is a 22-year-old son,
Hmm.
and they insure the life of the 22-year-old son, beneficiary of 50-year-old parents. Does it make sense or not?
This should make sense.
Why?
Because the 22-year-old son is probably the breadwinner of the household at that point in time, and
Well,
the
no. 22-year-old son's salary is going to be pittance, but that's not the main point.
then
The main point is two things. One is that, did these parents spend a lot of their savings on this kid's education? If they spent 50 lakh on the education and now they don't have savings because they know that the son's future income is what is going to replenish their savings or take care of them in their old age, then yes, it makes sense to do this insurance. On the other hand,
Hmm.
if the son was got into a college with a minimal fee, and the parents didn't spend too much on the son, and they kept their own finances and
Intact.
savings intact, then at this point insurance is not needed, right? So ultimately, if the parents are going to depend on this child for their future, then insurance is needed. Okay, let's take
Okay.
another example.
Hmm.
Well, this was the example of my mom, right? 70-year-old mom, and beneficiary is me, makes zero sense. Okay.
So what I'm hearing is insurance makes sense only if the person being insured is responsible for an income stream
Hmm.
for the nominees who are going to be benefiting from that person's passing away.
Yeah, except I'll take one more example which makes it a little gives a little twist, right?
Hmm.
So imagine a 35-year-old stay-at-home mother.
Hmm.
Okay, she takes out insurance on her own life,
Hmm.
and the beneficiaries are her 5 and 7-year-old children.
This definitely makes sense because those children are dependent on her for their
No,
expenses and everything.
no. The husband is there. Husband is earning. He didn't die.
Acha.
Now what? Do they need this insurance?
Uh, that's a tough one, but going by all the explanations that you've given so far, I would say no.
Depends, right? If the husband's income is just enough to have this house running properly,
Hmm.
after the mother dies, the husband's expenses on taking care of the children, maybe daycare, maybe cooks and cleaners and this and that, a whole bunch of expenses could increase
Hmm.
depending on their situation.
Hmm.
And in that case, the husband does need insurance to,
Make up that shortfall.
make up that shortfall. So it's that the woman, the wife, died, she didn't have any income, but she was saving them a lot of money, right? So unpaid labor has to
Yeah.
be taken into account.
Very important, and it's a thing that most of us tend to gloss over, but there is a lot of unpaid labor that helps us live our lives very
Yes.
comfortably. So make sure you note that when you're doing these calculations for calculating what income, what insurance, term insurance you should be buying. So now the question that arises is, insurance absolutely not necessary in most cases?
Actually, that's not true at all, right?
Okay.
I'm not trying to give that impression. Insurance is necessary in many cases, right?
Mm.
Just have to calculate it properly. So I just remember the case of one of my classmates
Mm.
who died young.
Oh,
Okay.
so sorry.
And I mean, uh, IITN,
Mm.
so a very promising career, absolutely no problems with anything in life,
Mm.
but died young without having enough savings. And we had to like take contributions uh, so that his wife and kid wouldn't suffer, right?
Mm.
He absolutely should have had insurance, right? And this happens a lot,
Mm.
right?
Mm.
People die unexpectedly, and the ones left behind struggle for money. So you definitely need to do that calculation as to, if you die, how much money do the people left behind need so that they can continue a comfortable life.
And that, I think, is the crux of the matter. You have to calculate how much they will need if you die. The
For
answer may
comfort, not for luxury.
not, yeah, for comfort, not for luxury. The answer can be zero. Remember that. If you
Yes.
have, if both of you, or if the whole situation has enough savings involved, the answer might be zero. Or the answer might be a number that you will need to come to agreement with and start planning for. So do take all of that into account.
And
Very,
keep in mind that if you don't die, you want nothing. Do not do
very
endowment.
important. If you don't die, you want nothing.
Yes.
My name is Shrikant. I want everything. This is Naveen, and this has been Future IQ.
Thank you.